Hey everyone, my name is Candace. Welcome back to the channel. Now, I know you see the title and I know you see the thumbnail and you're a little confused because social media has been talking about this and this is a hot topic. Don't worry, I'm gonna break this down for all of us. Okay, so all over TikTok, Facebook, Instagram, and blog posts, they're talking about how Zelle, PayPal, Venmo, Cash App is now going to tax you. They're talking about if you receive any of this on these apps, you're gonna be taxed. So stop using these apps. And I'm here to report to you that that information is somewhat true, but also somewhat false. Okay, we're going to go in depth of this new tax rule so you can understand exactly how this works. Now, this article by CNN was published yesterday, and we're going to break it down line by line, precept upon precept, so you can understand how this works. Let's get into it. Okay, so payment app providers will have to start reporting to the IRS a user's business transaction if in aggregate the total 600 or more for the year. A business transaction is defined as a payment for good of service. Now, prior to this change app, providers only had to send the IRS a form 1099-K if an individual account had at least 200 business transactions in a year. And if those transactions combined resulted in a gross payment of at least $20,000. The expansion of the reporting rule is the result of a provision in the American Rescue Plan, which was signed into law earlier this year. The ultimate aim of this provision is to clamp down on reported taxable income. Now, this is what social media was spreading, that if you made more than $600 off any of these apps, you were going to be taxed, okay? Yes, okay? That's technically true, but there's some fine print that no one really paid attention to. It's heavy on the businesses. So if you were to pay your rent through PayPal, or if you were to pay your rent through Zelle, like let's say the rent is due, but you live in an apartment with 3 other people and you're paying your roommate, you're part of the rent, technically that's not a business transaction. Now that's what social media didn't tell you. It's speaking specifically to those who are business owners. So if you run a boutique or if you have like a clothing line and they pay you through Square, PayPal, Venmo, now that can be taxed. Okay, before it was if you made over 200 business transactions and you made up to 20K, then they had to report it. But now it's even if you made up to $600. So really entrepreneurs and business owners, this one's really for you. Now, you're probably gonna say, well, why should I care? Okay, well, everyone should care, and here's why. In theory, the only people who are worried about the rules or changes are those who were reporting all their business incomes in the first place. But in reality, tax experts say the threshold change could mean some administrative hassles for many tax filers who use payment apps, whether or not they're engaged in business transaction. These third-party settlement entities may not know for sure if they're dealing with a business or an individual, or if they're dealing with the payment for good of services or non-taxable transactions. It's going to be up to the taxpayer if they receive a 1099 in any form for a non-taxable event, such as splitting the rent among roommates, splitting a dinner bill, or even selling something on eBay or less than you paid for it. You'll have to explain to the IRS that that 1099 was received for a non-taxable transaction. Okay, so basically what it's saying is, if you're not a business owner and you receive a 1099, it's going to be a little confusing for you because you're going to have to report to the IRS if that was a business transaction or if that was just a good of service. Okay, this is why it should matter to you, because if you are to sell something off of, out of your house and you do it on eBay and it's a payment that comes through and you receive a 1099 form, it's up to you to explain to the IRS that technically this is not a business transaction, but rather this is just a quick little sale. Does that make sense? All right, now let's get into what happens now. Each app provider must decide which procedures it will use to accommodate the rule. And will it need to alert their customers about what? If anything, it will be required for them a better identity to the nature of these transactions. For instance, PayPal, which now owns Venmo, recently put out an initial Q&A for users of both apps. It noted that in coming months, we may ask you to provide tax information like your employer identification number, your individual tax ID number, or your social security number if you have not provided it to us already. So for right now, it's going to be on the apps, okay? It's up to Zelle, Venmo, Cash App, Square. They're going to put in that paperwork. Nothing for you right now, okay? It's if you receive any information, if they're asking you for your social, if they're asking you for your tax ID, you have to update the app, of course. But for right now, there's nothing that you need to do. It's only if you receive that 1099 form, and then it's your responsibility when you file your taxes to ensure that you tell the IRS that that wasn't a business transaction or it was. Now, I hope I have broken down the rumors of social media, okay? So if you're getting your rent or you're splitting the dinner bill, it's not really going to affect you because, I mean, you just have to explain to the IRS that you were getting dinner, okay? I hope that breaks down everything that you may have had questions about. Don't forget, we're here all week, every single day, giving you information about the IRS. So feel free to ask any questions, comments that you may have. And remember, we're giving free calls to the IRS all this week, and the link is down below. We'll be back. Have a great day, everyone.